Welcome back to the channel, everybody. So today we have some XRP news, Bitcoin news, Solana news, and we might get a little bit more clarity with what's going on with the whole Ethereum investigation. Remember, we have two, I don't know if people caught that, two investigations into Ethereum, one by the SEC and one by some government somewhere who requested to remain anonymous. So maybe we'll learn a little bit more about that in one of the articles today. But first, let's begin here. This article is titled, Coreum-Based DEX lists 2 new XRP liquidity pools, and it goes as such. Pulsara, a DEX built on the Coreum blockchain, has opened its doors to the XRP community with a new listing. Through a new listing, the XRP ecosystem has become more intertwined with the Cosmos ecosystem. Pulsara, a Coreum-based decentralized exchange, announced this week that it has enabled support for 2 XRP-linked liquidity pools. The new Pulsara listing allows users to exchange both ways XRP for Coreum, the network's native currency, and SARA, the native token for the Pulsara DEX. Users earn SARA tokens for supplying liquidity to the pairs that have seen active usage since their release. Scroll down here a little bit. It says Pulsara's listing of XRP liquidity pairs follows the launch of the Coreum XRPL bridge roughly 1 week ago. As reported by the Crypto Basic, the newly launched bridge allows users to move XRP from the XRP Ledger to Coreum and other EVM-compatible blockchains. In the past, bridging service Sologenic reported moving up to 37 million Coreum, valued at 7 million from XRPL to Coreum. The launch of the new liquidity pools could also potentially boost the movement of assets across both networks. It says the latest development involving XRP and Coreum is significant for multiple reasons. Per Pulsara's announcement, the listing was subject to community voting, with a majority in favor of adding XRP pairs. Evidently, this suggests that XRP maintains its strong following even beyond its native ecosystem. Such integrations help bolster XRPL interoperability, allowing capital to flow freely between XRPL and other blockchain networks. All right, so more good stuff happening for the XRPL and for XRP holders, I guess, if people want to be involved with this. So now let's move on here to another article. Now, this is just a fun article, right? You make up your own mind how you feel about it. Some people like these types of articles. I like to have a little bit of fun. Some people don't like these types of articles, but the article is titled XRP 58,431% surge to $352. This article starts as such. Crypto analyst Steve Courtney says the XRP stock RSI currently shows promising momentum. He identifies a similar bullish pattern to the 2013-2017 setup. XRP has dropped considerably since it claimed the 74-cent high on March the 11th. The crypto asset closed March 11th with a massive 18% surge, ending the day above the 72-cent price level. However, XRP faced a sharp retracement from the next day. All right, they go through a lot of this other stuff here. I just want to get right to where he's talking about the high numbers, and it gets my adrenaline pumping. It says XRP eventually broke out of the symmetrical triangle in March 2017, leading to impressive gains. Data from Courtney's chart suggests that the crypto asset rallied 58,431% during the 2013 to 2017 performance, culminating in the $3.31 all-time high. Yeah, but I also take into account that was a completely different time period, completely different energy, mostly positive sentiment from what I've read at that particular time towards XRP. Now is a very divided sentiment towards XRP. Some people love it, some people hate it. The crypto markets are completely different. You still have the battle with the SEC going on, even though XRP has this clarity, institutional use, which XRP is designed for. Institutional use is still up for question. So, it's completely different, but let's keep going here. It says after reaching the all-time high price, XRP recorded another retracement, which has resulted in the formation of a similar symmetrical triangle. XRP has traded within the symmetrical triangle for 6 years and 2 months. A potential breakout It says Courtney believes XRP is looking to eventually break out of this triangle formation, with the stochastic RSI flashing the same bullish setup recorded during the previous breakout from the past triangle. The market analysts question if the market could record a similar 58,431% rally this time. I'll take any big rally right now. You want to be honest. Says with XRP's current price of 60 cents. But like I said, everything is different than before. Although I believe everything has only gotten better, the pathways to surges, I believe, are very, very different. The dynamics that lead to such an astronomical surge, I believe, are different. Now, it says its value would skyrocket to $352.94. This valuation represents an ambitious milestone for XRP. Notably, while the cryptocurrency could record a breakout from this symmetrical triangle, the likelihood of clinching a 3-digit price such as XRP, of course, then they say is extremely low after all of that buildup, right? But obviously, this is all opinion based. What the people believe is going to go low, opinion, high, opinion. You got to make up your own mind where you think things are going to go. But I always love reading articles like that. So now let's move on here because we're going to talk about Bitcoin now. That's one pathway. If Bitcoin skyrockets like people say it might, then everything else is going to go up as well. XRP will be one of the biggest benefactors of Bitcoin skyrocketing, no doubt about it. Solana will be there. A lot of things will benefit. But this article here is titled "The Bitcoin Halving." Oh, not this Bitcoin halving is different, says 21 shares. It says, unlike previous cycles, this year signals a departure fueled by growing institutional adoption and expanding use cases, painting a bullish picture for Bitcoin. It says the approval and success of the ETFs have marked a historic milestone in the cryptocurrency's journey. Since their inception, Bitcoin has witnessed a substantial 60% price growth. The influx of institutional interest in Bitcoin ETFs has attracted over $30 billion in assets under management in 2 months. This surge in demand is also reflected by a record-breaking $1 billion of inflows in a single day. Meanwhile, net flows exceed $10 billion and daily inflows triple the daily minted supply. This scenario is poised to intensify post-halving, with ETFs holding over 467,000 Bitcoin, excluding Grayscale, significantly outstripping Bitcoin's annualized supply of 164,000 BTC. The existing appetite for Bitcoin has already taken up about 4.5% of its accessible supply. Therefore, an increasing adoption of Bitcoin ETFs could catalyze a supply squeeze. Quote, with registered investment advisors overseeing around $114 trillion in the U.S., mandated to wait 90 days post new product launches before investing, a mere 1% allocation to Bitcoin could trigger substantial inflows, nearly doubling its current market cap and resulting in a supply squeeze in the process, analysts at 21 shares wrote. Sounds highly feasible, and man, most people will not expect what might be coming. And once again, if that happens, then we are definitely looking at the biggest bull run of all time. This is coming from 21 shares. They're reputable. We'll see if it happens, but they're laying it all out for people, right? The steadfast confidence of long-term Bitcoin holders, despite the market's volatility, also exemplifies the unshakable belief in Bitcoin's value proposition. Yes, but we also read a lot of articles that said a lot of long-term holders were selling a lot of their Bitcoin. So I don't know which one I am to lean towards, but there would still be a good amount of people holding Bitcoin if they're wise. In my humble opinion, that's just how I feel, not financial advice. The supply held by these long-term investors remains at approximately 70% of the total circulating supply. Meanwhile, the supply held by short-term holders has surged by over 33%, further constraining available supply and hinting at impending price surge. According to analysts at 21 shares, the upcoming Bitcoin halving on April 25th, 2024, set against this backdrop, suggests that the cryptocurrency market may be on the cusp of a unique and potentially unprecedented bullish cycle, with the ETFs drawing in a new wave of traditional investment and unwavering conviction of long-term and short-term holders. Bitcoin supply constraints are becoming increasingly pronounced. I wonder what's going to happen So let's say the Bitcoin halving occurs. You have a lot of people holding Bitcoin. Now, once you have something, and I'm just putting this out there because it always is on my mind. Once you have smart contracts for Bitcoin, right? And people can lend out their Bitcoin, they're getting yield that way. They can stake their Bitcoin, maybe. I don't know how that's going to work. They can earn yield that way. There's going to be a lot of different ways they can earn yield. How does that affect Bitcoin's price? Because there won't be a whole lot of selling going on. You see, get what I'm saying? So we'll see how that works because smart contracts for Bitcoin are coming. That's just how it is. But it may have a significant impact. So I just try to keep that in mind. So this article here is titled "New Research Suggests Solana is the Apple of Crypto." Hey, listen, as a Solana enthusiast, I like how that sounds, right? However, the allure of Solana extends beyond just another Apple mimic. Unlike Apple's hardware-centric approach, Solana inverts the equation, focusing on leveraging hardware to enhance and broaden Web3 experience. Co-founder Raj Gokal often articulates Solana's vision as the, quote, Apple of crypto, unquote. It highlights the ambition to innovate through software, introducing new functionalities and experiences rather than only facilitating hardware sales. This analogy, while apt in showcasing Solana's dedication to performance and user experience, only scratches the surface. According to researchers at 4 Pillars, the true essence of Solana lies in its network performance, which is powered by multi-threading for parallel processing. This technical prowess has attracted a pragmatic developers keen to explore Solana's potential during the DeFi and NFT boom. Its ability to offer transactions at low fees quickly position it as a competitor to Ethereum. Here's a quote. It says, Solana is capable of processing thousands of transactions per second, with block times recorded at 400 to 500 ms, significantly higher performance than existing blockchains. Ultimately, Solana's adoption of this technical approach aims to achieve 2 missions: an expandable platform that can handle high usage and composability between applications, researchers at 4 Pillars wrote. The commitment of those who share Solana's vision has not wavered. Indeed, the focus on bolstering network stability and tackling technical challenges has helped foster the community's confidence. Yeah, Solana is super bullish. I remain super bullish. A lot of people love Solana. It's great to use, great to build on. I mean, how does it not continue winning? I just don't see that. I see it having a very smooth upward trajectory long into the future, but we shall see. Just my humble opinion. So now let's move on here to this article. Okay, so hopefully this article is going to give us a little bit more clarity here into what the heck the SEC is doing with Ethereum, because if they take Ethereum down, classified as a security, is going to be very, very detrimental to crypto overall, because there's just so much that's built on Ethereum. You know, I really just feel like it's Gary Gensler trying to save face and distance himself in his iteration of the SEC from what happened before, because they're under investigation right now from another company. The SEC is under investigation about their dealings with Ethereum and handling of Ethereum, and people from the SEC leaving Ethereum and joining certain companies that had a huge hand or stake in Ethereum winning, right? So they have to sort of rectify that somehow. I think this is a little bit of them trying to do so. So we'll just read this little tidbit here. It says, the stakes in the bitter war between the SEC and crypto industry just got higher. As Fortune reported on yesterday, the agency is going after Ethereum, issuing subpoenas to U.S. companies that require them to supply all records of their dealings with the foundation that oversees the blockchain. This is a big deal since so much of crypto industry is built atop Ethereum. That's what I was just saying. Not just Apple. Didn't Coinbase build some sort of infrastructure on top of Ethereum? Am I recalling that correctly? Which then makes sense why Coinbase came out today and they're like, clearly Ethereum is not a security. Like, well, yeah, you have a vested interest to say that. You just hope Ethereum is ready to fight. You better hope that they're ready to go to war. Because when the SEC comes, you better have that money ready and your legal team ready. Anyway, it says the agency is going after Ethereum, issuing subpoenas for companies to supply them with all records of their dealings with the foundation that oversees the blockchain. This is a big deal since much of crypto is built atop Ethereum, not just applications, but entire secondary blockchains. And you even had some of them moving Some of them went solo and then went back to Ethereum to become layer 2s. It says the entire secondary blockchains like Polygon. You know what? I forgot about that. I'm super bullish on Polygon. Now keep in mind, a lot of these blockchains are blockchain agnostic. They just chose to be with Ethereum because, Ethereum is huge and is widely accepted. Quant, for example, can move anywhere, is blockchain agnostic. Now, is Polygon blockchain agnostic? I can't remember. Hopefully they are, just in case. But I think any of them could switch over if they really want to. I mean, how much manipulation of the mechanisms of the chain do you really have to manipulate in order to get it to move over to somewhere else? I don't think that should be that difficult. Hopefully I'm wrong, but we'll see. And there's no guarantee they're going to win against Ethereum, but we shall see. We know the impacts it has once SEC comes out and says this particular thing is a security. People start selling. Well, this is what happened in the past. People start selling like crazy. They get all panicked. That hasn't happened yet, but this hasn't gone too far. But should that occur and Ethereum starts tanking or something like that, then a lot of these other blockchains built atop Ethereum will need to make some necessary moves, but we shall see. I hope they're ready to fight the SEC. I hope they're ready. If the SEC goes ahead with its plan to declare that all of Ethereum is subject to its securities laws, it will have broad and unpredictable consequences. Yeah, listen, I already had my thoughts, and then I asked AI this morning. Yep, I used AI. I asked AI what would happen, and it was talking about the panicking that would come, the tighter scrutiny that would be upon Ethereum and companies using it. And then it also went into the possibilities of selling, how people panic sell, like what I was just saying, which confirmed to me that, sure, that's a possibility. Man, there's so many good projects on Ethereum as well. So there's a lot of good projects on Ethereum. So look, once again, hopefully it works out. We'll try to stay abreast and privy of what's going on with that. OK, so now. And they have a lot of NFTs over there. I know a lot of NFT projects left Ethereum, but there's a lot of good NFT projects on Ethereum as well. So now we have a little bit of banking news. This is from Financial Times. Uh-oh. How does it always get worse for the banking industry? You know what's so crazy is it seems like their regulators want them to fail. I'm not making this up, folks. It's like they don't want to bail them out. They don't want to rescue them. They want them to collapse. But if I'm right in that, and they want some of these weak banks to collapse, and not just so they can merge, because some people would say that, well, they want them to collapse because they want the big banks to be able to absorb the small banks. Wait a minute. This article might say a little different. But maybe if they want them to collapse is because you first have to break down the old house, break down the base of an old house before you build a new one. New financial system, maybe? I don't know. You tell me. This article says U.S. regulator proposes new limits on big bank mergers. That's interesting, considering that there's a certain number of big banks that are they're legally supposed to absorb smaller banks that are about to go under. And I don't know what the requirements are, but you can look that up. But if that's the case, and they're proposing this, and it's going to limit who they can merge with, that means, theoretically, I would suppose, that means a lot of banks are going to go down. Now, if you want a little bit more clarity on how this makes it that much more difficult to weather what's coming, watch the members only video I just released yesterday and let that open your eyes. It's either the one from yesterday or the day before. One of those two. And look at that data. Look at that information. Well, let's move on here. Let me read this little tidbit. It says a top U.S. banking regulator has proposed new rules that would make it harder to complete big bank mergers. So somebody's not going to get saved by a merger. You know how before when Silicon Valley Bank went down, SVB went down, you had some banks that took over some of their assets and stuff like that. Well, now some of them are not going to get rescued, and that's going to be a problem. The restrictions set out by the Federal Deposit Insurance Corporation on Thursday would apply to any takeover that created a bank worth more than $50 billion in assets. Yup, some of them are going down. They're not going to get a rescue, and a lot of them are in trouble. Once again, go watch that members only video. It says an increase for any deal and an increase for any deal above $100 billion. If the guidelines come into force, it will be the first time since the financial crisis that the watchdog has updated its rules governing takeovers. The board of the FDIC voted to approve the update on Thursday, but the proposals are still subject to a 60-day comment period. The rules will for the first time make the size of the bank created by a merger a factor in determining which deals receive further scrutiny from the FDIC. This is going to get ugly. Quote, bank regulators have been shifting the goalposts for the types of deals that will meet their standards, unquote, said Randy Benjink, a partner at law firm Covington who specializes in bank regulations. He believed the FDIC and other regulators' new merger rules will make it harder to do deals. Exactly. You're doing this. Listen, everything happens for a reason. You're doing this when you know what's coming. I've been talking about what's coming. Jerome Powell said what's coming. Janet Yellen said what's coming. And every top economist, we followed them extensively here. All the top economists said there's a wave of bank failures coming. And you do this? Oh my. Oh my. People better get ready. I'm ready. When they go down, other things go up. Just know that. So I'm ready for this to happen. I'm ready for this to happen, folks. New York Community Bank, which raised more than $1 billion this month to shore up its finances. Oh, yeah. New York Community Bank is in big trouble. Remember, we read the other day how they got that money. It's like, see, they're phrasing it very nicely. New York Community Bank, which raised. It raised? Somebody gave them this money. I can't remember the company, but we covered the article. So some of you know. They gave them this money. They didn't raise the money. They were handed this money by people with deep pockets. We read about it. So that's a fact. They're in trouble. Which means if they didn't get handed this money, they were going down and the domino effect would have kicked in. Why do you think people panicked? Oh, it's about to get fun, for sure. It says to shore up its finances and after shedding 2/3 of its market value since the end of January, had previously more than double its assets to $120 billion through acquisitions. I didn't even realize this. Assets at Silicon Valley Bank almost tripled to $210 billion in the 2 years before it failed. Well, folks, I'm going to leave that one there. All right. And I have one more article about Circle and Solana, but we'll leave off for here now. OK, so now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.